We're here on the floor of the Traders Expo. My guest today is Corey Rosenblum. We're talking about day structure and how it helps you find intraday opportunities. So Corey, first of all, what do you mean by day structure?
Sure, Tim. Day structure refers to the intraday movement. So we're looking at a trend, or really the volatile environment. So a trending environment versus a range environment. And also clues off the opening if there is a large gap, if there is not a gap at all. Day structure refers to what types of trades would be the best and how you can look and almost prioritize trades and group them. For example, retracement trades would do best in a trending structure where market is making higher highs and higher lows all day long. Retracements are best. Most of the days are not trend days. They're mostly range days. Therefore, any kind of fade trades, indicators would be Bollinger Bands, or anything like that will be helpful on a range day.
All right, so you talk about looking for specific patterns, maybe a bear flag or a bull flag, but that's not enough. You've got to really look at the day structure to get an idea of what's going on.
Exactly. And we can look at trades in isolation. So just, for example, a bear flag, which would be one that's an impulse move down. It's a retracement style trade. If the market is making a movement, if it opened up with a large opening gap, and the market has been falling all day, I will be much more likely, in fact eager and excited to, take a bear flag as opposed to a bear flag that just develops. Same setup, same classic setup in the context of a market that opened up without a gap and that has been ranging between the first 2 to 3 hours. If that bear flag happens at noon, same bear flag, let's say, I am much more likely to take the actual trend day bear flag as opposed to a range day bear flag.
All right, and when you talk about the overall market, are we just talking about watching the S&P 500?
Sure, I trade the ES futures, so I'm specifically looking at the S&P futures. However, the concept of day structure will work for any market, any stock. Usually most stocks follow the broader market, so if the S&P, the Dow, the NASDAQ, if they're having upward movement trend days higher, then generally most stocks will be following that. But that's not always the case. Some stocks may be in a range day. So an individual trader needs to know what their individual stocks are and trade those. A good strategy, most people don't like range days. I don't like them myself, but they are more common, to look for and scan stocks that are showing momentum, showing impulse off the open, or breaks that are trending. And you can trade stocks that even in the market may not be doing much. Look for stocks that are, and that can be helpful to find trend days. They're much more fun to trade trend days than range days.
So typically those are stocks that are in the news, right? There's a reason behind this momentum.
Yes, maybe an earnings, maybe a breakout from its own technical range on a higher frame, or something has happened news-wise, up or down. Not always good news. A trend day can be a down move, and sometimes those are, for lack of a better word, better, because the markets tend to fall quicker, faster, more impulsively than they rise. So sometimes bad news or bad breakdowns can actually be better trading opportunities for intraday traders.
You just have to be comfortable shorting the market, right? Which everybody should be.
You do, but new traders might not always do that. I remember when I first shorted my first stock, it's complicated. When you're first new and doing this, it's a little bit different. And the metrics are not. It's the same metrics, the entry and exit, but mentally it's not. You're short selling something. So yes, it takes a little bit of practice, but once you do that, most traders that I talk to, and myself included, we tend to prefer the downside because it's faster, more impulsive, and it's sometimes more fun to trade short than long.
Corey, thanks for your time.
Thank you, Tim.
You're watching the MoneyShow.com video network.